Hey, so in this video, we're talking about ways that you can make money during the next recession. And we don't know when it's going to be. You can watch the news and they might say it's going to be tomorrow. They might say it's going to be next month or maybe a year from now. Nobody truly knows when we're going to hit the next recession. But the one thing that we can be certain of is that we will have a recession at some point in the future. I kind of view it like trying to divert a hurricane to go somewhere else, tell a hurricane to go in a different direction. It's just not really possible. We're going to have a recession and we can't avoid it. So what are some ways that you can make money during the next recession? And I don't really look forward to recessions. I don't think that they're fun. Some people view them as buying stocks on sale and starting businesses for cheap with cheap interest rates. But the reality is people lose jobs during recessions, and even suicide rates are tied to going up during recessions. There's a couple studies on that. But let's talk about some ways that you can make money during a recession so that you can benefit, so that you can help your family and help others get through a recession comfortably without having to stress financially and could lead to some other problems. So the first thing that we want to think about is kind of looking into the past at other past recessions to see what happened there and what companies or what businesses did pretty well during a recession. And one thing that really comes to mind is actually Dollar Tree. So while a lot of other companies were face planting during the recession that we had about 10 years ago, Dollar Tree was actually faring pretty well. And the reason for this is quite obvious, and that's because people weren't buying these expensive items anymore, but instead going to Dollar Tree, where everything's $1, and spending money there because it was a lot cheaper. They were cutting down their budgets and they were saving money. So Dollar Tree actually fared pretty well. Another company would be Walmart. So Walmart did pretty well back in the past recession. That's because, same thing with Dollar Tree, people were spending less money on these expensive items. They weren't buying these Gucci t-shirts anymore. They were buying things at Walmart and at these discount stores where everything was a lot cheaper. So you want to think about that. And this kind of leads me into the next point here, which is healthcare. And so the healthcare industry and the education industry in America, actually, the unemployment rate in both of those industries actually decreased during the recession. I was just reading the report from the Bureau of Labor Statistics about the unemployment rate in each and every single industry. In the education sector and the healthcare sector, the unemployment rate actually decreased while everything else was increasing. So what this means is in the past recession, healthcare actually did pretty well in terms of employment as well as the education sector. And so you can think about this because the healthcare sector has been growing pretty steadily for a very long time. That's because people, regardless of the economic climate, they'll always have to pay for those really, really important medical bills that you need. If you need to get better, if you're sick and somebody tells you you need this pill and it costs X amount of dollars, you will find a way to come up with that money. That's how it works. People are very motivated to fix themselves and fix other people's health problems. And so it's definitely something that you could consider looking into. Healthcare as a whole, it's always going to be around. It's always going to be increasing in improvements in healthcare. And it's always going to be a market that is overall pretty well off. Now, it's almost never advised to try to time the market. Even the greatest investors like Warren Buffett say timing the market doesn't really work out for most people. But in reality, let's be honest, a lot of us try to at least factor in timing the market into our equation when we're trying to figure out how to make money, because you think the market's been increasing for 10 years, it's probably due for a correction at some point in the near future. So if you are going to try to time the market, at least in part, it's important to have some cash saved up. It's really important to have cash saved up, because the worst thing that happens to people is that when we enter a recession and say it's fall 2008 and we're at the bottom of it practically, people don't have any cash. They don't have any money saved up because they were buying all these things with their credit cards years before, because the markets were doing great. The economy was doing great. Consumer confidence was at an all-time high. And so people are spending more money and they don't have any money left because they have credit card debt racked up and student loans and all kinds of different debt, and they don't have any cash at the bottom of the market. When you don't have any cash, you can't buy that house for 25 cents on the dollar down the road from you that is a great investment, but you can't buy it because you don't have any cash saved up. So I think it is important to have a decent amount of cash saved up for the next recession. Not too much, because it is going to lose its value if it's just sitting in a bank account. Or you can put it into something like a higher rate money market fund. You can get a few percent on it. I know Robinhood just came out with this new feature where they're offering 3%. You can watch Graham Stefan's video on that. It's really interesting. But you're going to need cash. But more than cash, kind of coinciding with that, you're going to need to have a good credit score. See, if you're trying to make money during a recession, when we're at the bottom of the market and you want to buy your neighbor's house that they're selling for $80,000 that 2 years ago sold for $200,000, it's a great house, it's undervalued, you want to buy it, but you don't have a good credit score. It's going to kill you. It's going to be so painful if you don't have a good credit score. You see this golden opportunity, but you can't buy it because you don't have a good credit score. So build that credit score. If you don't have a good one now, if you jacked it up because you missed some payments in the past, it's okay. Just keep working on it. There's nothing you can do in the short run to really boost it significantly to go from 400 to 800 credit score. But you can keep working on it and building it. It's so crucial at any point in your life, at any market in the economy as a whole. It's important to have a really good credit score. Now, people also consider investing into precious metals during a recession. So before we hit a recession, when we're at an all-time market high, some people like to invest into precious metals. And this is kind of for pretty obvious reasons. But in a lot of cases, people think that the correlation between gold prices and the stock market are inversely related significantly, like as if the markets drop and gold goes straight up. And that's not always the case. You can look at the past couple dozen recessions that we've had and see that that's not always the case. In some cases, like in the Great Depression, gold went up because people were really scared about the market. There was a lot of turbulence. There was a lot of fear about the markets. And so gold prices went up. But there are going to be times where gold doesn't always increase just because the markets drop. So you can look into precious metals. I suggest just doing a little bit more research on it if you get into them. I'm not a huge fan of precious metals. It's just not my cup of tea, but it's totally cool if that's something that you would consider trying to make money on. If we're at the top of the markets and you think the markets are going to plummet and you could invest into some precious metals, it is something that you could look into. So it's common knowledge that you want to buy low and sell high. But what's interesting is that a lot of people, they end up buying high and selling low. And the reason for this is because they let their emotions get to them. So they wait out on the stock market for years and years and years. And then all of a sudden, 9 years of bull run, they go all in and they put all their money into the stock market at all-time highs. And then the stock market decreases and they sell it all because they get scared. It's happened with Bitcoin. This happens with so many different things. People buy high and they sell low. It's the complete opposite of what you want to do. And the way to kind of fix this is to really think of the one quote that Warren Buffett said that's pretty famous. And that is, you want to be fearful when others are greedy and greedy when others are fearful. So just think about that for a second there. You want to be greedy when others are fearful. So when everybody's running away, maybe that's the time when you want to go against the grain. Now, maybe it's not as well. If the market just starts to collapse and then you run into it, might not be the best time. It's hard to time that to get to the bottom of the market. But sometimes you want to focus on things, not so much on the macro, but more so on the micro. See, there's always going to be companies, there's always going to be investments and business opportunities as a whole. There's always going to be ones that have so much potential, even at the bottom of markets, even at the worst of the worst times. There's going to be a business that you can start that can be the next billion-dollar business. No matter what day of the week it is, what year it is, there's going to be something that you can get into. So don't worry about the macro too much. Focus on the micro, focus on an individual company, focus on your own company, focus on your own thing. One more thing though, I think is really important. You want to diversify your income so that you're not totally dependent on one source of income. I think that's a mistake that people make, where they might have their job, it might seem very secure, maybe they're a middle manager, and then they get laid off. And then all of a sudden, they're $6,000 worth of expenses every single month. Now they can't pay for them. They can't afford to pay for them. It's a serious problem that a lot of people faced during the last recession that you don't want to face. So have something lined up so that you're able to sort of diversify your income. Maybe you have some real estate properties. Maybe you have a hobby that you enjoy, playing music, and so you can teach people how to play music and make a few $100s a month just to pay off some bills that you might have to pay off in order to survive, in order to get by without having to worry too much. So that wraps up this video. Any questions, comments, leave them down below. Leave your thoughts down below and subscribe if you haven't subscribed to this channel already. I'll see everybody next time.